Hello everyone, how's it going? I hope that you had an amazing day and a very profitable time with Palantir in the markets. If you're searching about Palantir and have decided to click on my video, then chances are you are wondering about the same question that many of us are asking ourselves. Should you buy more Palantir given the current price action that it's having? So, as we know, over the past few years, the job market has been looking ever more uncertain every single day, and on the other hand, our meager savings have been melting away by the pace that the inflation has been growing. And in fact, many of us have rarely seen such an inflationary environment for decades. When every source of uncertainty is about to go away, we must use that opportunity to remember that we alone have the control of how our life is going to be. So we have to start working about our own financial independence right now and then. In order to secure this financial future, we gotta find the growth opportunities of tomorrow and seize the ones that can multiply our capital exponentially, increasing the money available for further investments. Essentially, we gotta find the golden goose. And for many, Palantir is exactly something like that. So over the past few years, Palantir became so much more than just another tech stock collecting funding in exchange of promises of market share growth or sector growth, like so many others on the Nasdaq. It's a major company that plays the role of the canary down the coal mine, and it has enough clout and mystery around it to arouse the market's curiosity and people's tendency to follow the trend. It's a company that people would often view equally as the risk appetite of the market alongside Tesla or Apple. The fact that Palantir may rise and fall with the tidal waves of risk capital is a limited but very useful predictability that makes it a crucial stock to observe and to follow up. In today's video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Now, before the video continues, I just want to take a moment to thank you for coming to my channel and hope that you're going to enjoy your stay here and to take something new and useful from my content. So if you like what you see, please consider to like, subscribe, and to check out my channel for playlists of the companies that I cover, including Palantir. With that being said, I hope that you're going to enjoy my analysis, and let's get started. So Palantir traded today with a fairly stable price action. It reached a high of $25.47 and a low of $24.76. Over the past 5 days, the share price had a rather significant recovery, increasing by more than 4%, sitting right above the ceiling that turned almost like a support of around $25. Nevertheless, it seems that the price is now beyond the critical levels of 20, and I want to say that maybe in not that long, we're going to see $25 becoming another support level. It's encouraging to see Palantir going through so many critical levels in such a short period of time, and the fact that the climb upward has yet to stop. In the big picture, Palantir is now trading near the 2021 level, which is not that far away from its historical peak, given how low the share price went down at some point. The next target is to break through the resistance of 25 and then to aim for 30 in the short term, which is something that I personally believe as achievable. Palantir has been a stock of significant interest since its initial public offering IPO. Ever since the first day that it traded, the sentiment was overwhelmingly bullish, and some may say unfairly so almost. With investors eager to capitalize on the company's innovative data analytics technology, Palantir's journey ended up being a period of bullish enthusiasm followed by very long sell-off periods, often dipping below the $10 mark. One notable aspect of Palantir price movement is its correlation with news cycles. So, it's often observed that the news surrounding the Palantir company closely follows its actual price action, leading to self-fulfilling prophecy scenarios. When the stock is on an upward trajectory, positive news tend to dominate the headlines, fueling further investment optimism. On the other hand, during the downturns, and this is when it hurts, negative news amplifies the selling pressure, perpetuating the downward trend. In other words, the news are no help, really, and Palantir is really on its own as far as like our shares are concerned. Currently, Palantir is in the midst of a bullish run, albeit with some diminishing momentum. While the stock has shown resilience in the recent sessions, the pace of its ascent has definitely slowed, indicating a potential shift of sentiment amongst investors. And as such, there's a growing need for additional catalysts to eventually sustain and to push this existing momentum even further, right? One factor that can influence Palantir's future performance is its status as a large cap stock. With its market capitalization steadily increasing, Palantir is poised to solidify its position amongst the market leaders. Large cap status often brings increased, institutional interest and a broader investor base, both which could contribute to even further upside. Now, this is interesting regarding institutional participation. Palantir as a large cap is surprisingly dominated by the retails. Now, it's both good and bad. The good part is, more power to the retails. We are the retails, by the way. But the other thing is, it gotta make us wonder, why does the institutionals would rather stay on the fence? Because they pretty much just let go a magnificent bullish run upward, right? Now, there could be some structural reasons for this kind of hesitation, such as its pretty high price point, the nature of the industry, and so on. Now, something that can really influence Palantir's future performance is its own status as a large cap stock. Its market capitalization steadily increased over the past few months, and Palantir is poised to solidify its position amongst the market leaders. Some, by the way, were even saying that it's possible that Palantir will join the Magnificent Seven with $1 trillion worth of market cap. I don't know if this kind of thing is ever going to be possible, but then again, it's not impossible either. Just look at Tesla, right? 2019 and 2024. It's not really the same company anymore in the eyes of the market. Despite the current bullish outlook, it's essential to exercise caution, like always, especially in the short term. While the price targets is in the range of $30 to $35, it seems plausible given Palantir's growth prospects that these prices are going to be reached and even pierced through. They are, of course, by no means guaranteed, because there's no such thing as guarantee in real life and in the markets. The market dynamics can change very rapidly, and unforeseen events or market shifts could derail the bullish thesis. Essentially, what we're talking about here is that things look overall bullish, supported by its recent performance and the long-term potential. However, investors should remain vigilant and monitor any signs of waning momentum and external factors that may impact the stock's trajectory. And by waning momentums, pay attention to the volume. It's been quite a few days and weeks that Palantir is trading under the 30 days average, so beware of that. Now, with additional catalysts and continuing market support, Palantir as a company has the potential to reach new highs and cement its status as a key player in the industry. Now, the options trading for Palantir presents an array of opportunities, and also it gives us some very interesting insights. Currently, the available strike prices for puts range from $23 to $25, while the calls range from $25 to $27. The distribution would suggest a skew towards more call options than put option demand, which indicates a consensus amongst those who want to trade the options that Palantir's price trajectory is really poised for an upward momentum. The options serve various purposes for stock investors, including generating additional revenue streams, hedging against price volatilities, and increasing the speculative exposure to a particular stock. Now, in the case of Palantir, options can be utilized strategically to navigate the market uncertainties and optimize the returns. Given the current options landscape for Palantir, a recommended approach would be purchasing both call and put options. Buying call options allows investors to benefit from the potential upside because it gives you the right to buy at a specific purchase price. And purchasing put options provides protection against any sort of downside risks. Now, this is called a straddle, and it's very advantageous when both options are out of money because you can minimize your premiums and also hedge against any sort of volatilities that'll go against you. Now, by employing a straddle strategy with out-of-money options, you can position yourself to profit regardless of the direction in which the Palantir stock ultimately moves. That flexibility is especially valuable in markets characterized by uncertainty and fluctuating sentiment. It's very important to note, by the way, that options trading carries inherent risks and does require some careful consideration regarding the market dynamics. So the options analysis does suggest a nuanced approach that balances speculations and the inherent risks. By purchasing both put and calls, you're basically just buying a double gated insurance policy for yourself. Now, potential shareholders or people who might be interested in Palantir might encompass a diverse group of individuals with distinct needs, desires, and limitations. Those prospective investors are motivated by the need to safeguard their capital in uncertain macroeconomic environments like wars, inflation, interest rates fluctuations, supply chains, and so on. They harbor the desire, by the way, to identify the growth opportunities that can significantly benefit their capital balance. Now, however, they obviously face limitations, including a lack of technical expertise in navigating the intricacies of a tech stock like Palantir, and a shortage of time and know-how in conducting thorough stock research. For those individuals, off-the-shelf solutions chosen by market data present a very appealing avenue to address their needs, and Palantir does emerge as a pretty compelling option. And by leveraging Palantir's advanced data analytics company capabilities, as well as their capability of surfing on what's currently trending, aka AI, investors can access insights and recommendations derived from extensive market research and analysis. This allows us to make pretty informed decisions and educated guesses without the need for specialized knowledge or intensive research efforts. So the first category of potential shareholders would be those who prioritize capital preservation above all else. They're acutely aware of the risks, posed by the geopolitical tensions, economic instabilities in many countries, and other macroeconomic factors. And for them, Palantir represents a strategic investment choice because of its potential to provide stability and resilience in the face of uncertain market conditions. And by allocating a portion of their capital to Palantir, these investors would seek to mitigate the risk while maintaining the opportunity for modest and yet steady returns over the long term. So that's the first kind. And on the other end of the spectrum, there are also the people eager to capitalize on emerging opportunities and to maximize their investment returns. They are driven by a desire to expand their capital base significantly through the strategic investments in high growth sectors. And Palantir's innovative technology solutions and potentials for sustained growth aligns pretty well with those objectives, who view the company as a promising avenue for wealth creation. And by investing in Palantir, they aim to capitalize on its growth trajectory and to reap the benefits of its expanding market presence and increasing profitability. Now, despite their varied motivations and investment preferences, potential shareholders of Palantir share a common need for simplicity and the convenience in their investment approach. Many of those individuals would lack in the technical expertise or the resources in order to conduct comprehensive stock research or navigate complex investment strategies. And as such, they gravitate towards like the off-the-shelf solutions that offer ease of use and accessibility, such as Palantir. Now, at the same time, if there's any good moment to remind people about like the potential downfall of Palantir, I guess this is it. It's a company that people may not understand fully what they do. It's a company that because investors, tech savviness might be limited or very uneven depending on the individuals, we may not see like very clearly regarding what their business model is exactly. We know that they build apps, we know that they build platforms, we know that they work with a lot of people with deep pockets or entities with deep pockets. But what do they exactly do? And are they going to continue to be so thrilled once they learn the truth, right? So for example, since they deal with data and data analysis, is it possible that there's going to be privacy issues or ownership issues? If that's ever going to happen, then Palantir could face like very steep legal fees or legal penalties. So that's one thing. The other thing is it's relying on large public sector entities. Now, what if those entities go through a budget cut? You see what I mean? Like, it's not going to affect Palantir in any way, shape, or form. And also, at some point, we might also ask ourselves, can this current paradigm shift around? Years ago, things that used to be popular may no longer be popular now, right? If you look at a few years ago, I remember stocks like Neo, stocks like DraftKings, they were very popular. So what about them now? Is it still going to be that good? And it's not just because those companies individually made mistakes or whatever. It's also because the shift of the market went away, just like they came. So this is why I would say we should not be unprepared for those kinds of shifts to occur. And because of this, we got to be careful about putting too much money in Palantir. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and declined quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Now, having said all this, my personal view on Palantir is to slowly build up a position over the next 12 to 24 months. I don't think that the price is going to go much below 20 or let's say 15 for that matter, but anything above that should be fair game for normal volatilities. I mean, the markets are not necessarily a place where we're going to have a lot of guarantees, and with the economy or the macroeconomic trends that we're having now, there's even less of that hanging around. But with that being said, with the interest rates increasing over the next few months, or at least the next few years, I do feel fairly confident that Palantir will at least be able to hold its ground right now and then in order to consider its future and its relevance in the economy of tomorrow. So just because of that, I do believe that patience would benefit us and is going to reward us handsomely. 5 to 8% or up to 10% of your portfolio, maximum exposure, and hold it for long-term investment would be my recommendation.